terms 210 net 30. The first thing they do is purchase merchandise. We're aware that there are terms, but that's not going to affect our first transaction. Then they return $1,450 of the merchandise to the supplier before they make a payment. And then they make their payment. The liability was paid within the discount period. Since it was within the discount period, that means they're going to get to take advantage of that discount, and we have to figure out how that will affect our inventory. And then the last thing that happens is all of the merchandise purchased that was not returned was sold for $13,500 cash. What you want to do when you see this type of problem, because there will be a problem like this on the test, is go first to what question are they asking. This first question wants to know what is the effect of the return of merchandise. Okay, so they're talking about number 2. What is the effect of the return of merchandise? I think it's helpful sometimes to write out your accounting equation and record for yourself transaction 1, which was the purchase. When we purchase that merchandise on account, it's going to cause our inventory to go up, and it's going to cause our accounts payable to go up. Right? So then the next one is when we return that inventory, a portion of it. It says the company returned $1,450 worth of merchandise to the supplier, but before any payment was made. So we're simply going to reverse this transaction. Whatever we did here, we will now do the opposite. We will reduce inventory and we will reduce accounts payable by the amount of $1,450. And that's what this question was about the return of merchandise. So we can walk through each of these answer choices. First, you can get rid of anything that's not $1,450. Missed. Okay. Then you need to look at the words. The first one says assets and equity are reduced. It's true that assets are reduced, but this is not affecting equity at all. So that would not be correct. And then the last option says assets and liabilities are reduced. And because you wrote that out in advance, it's really easy to see, yep, that's what happened. Our assets went down, and the amount that we owe now went down. Good on that one? Because there's another transaction. And this one is the harder one. Would you mind pushing stop and then start again?